The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and you have markets accelerating higher. We got a big week of earnings. We have a big week of economic data, and you could say it begins today with the Federal Reserve meeting today, announcement tomorrow. 2 p.m. Eastern Time, 75 basis points, the expectation. We'll see what the chairman has to say in terms of going forward. How set are they on the path they're on? Where is the data going to be? We will find out, folks, tomorrow at 2 p.m. Eastern Time. The market, though, positive by 40 points. There's your daily chart, 39.22, right at that 618, folks, of the acceleration. Talked about this on the program yesterday from where we were at about 4,200 back on September 13th. And remember, that's when we got inflationary data for the month of August. Okay, you fast forward to October 13th, we get inflationary data for the month of September. And what do, man? You basically slingshot from the lows to accelerate higher. We're at 39.22. Folks, you're at about 11, 12% bounce from where we were on the lows. So, yes, there's some optimism here, but we already have about 11 to 12% of optimism off of the lows, and that was following two pretty disastrous CPI prints on the inflationary trend. We'll see what the Fed does tomorrow, and then we go from there to non-farm payrolls on Friday, and then we go right into CPI data the following week, I believe. S&P is up by 40. Let's put it on a 15-minute. There's your action last night. Basically, right out of the gate, we start trading lower to higher, at about 415. You see a little bit of volatility at about 3:30 in the morning. We get the NASDAQ 100 up 1.3% right now. And check it out, right? From where you were on Friday's action to where we were yesterday, all you really did on that pullback, folks, yesterday was kind of chop around at the 382 pullback of just the move we got higher Friday. You pull back, and guess what? We're going to be testing the highs right near the open this morning at 11,597. You have the Dow up 209. We were just at 33,000. We're at 32,985. You're up by about 0.2%. Russell up by about 18 points. That's 1%, 1871. Bitcoin, 20,500, we'll call it. And crude, how about it, man? You talk about an acceleration. Crude pushing the highs of last week. We're at 89.16. Talk about volatility, man. 87.65 up to 89.19. Now, I've been saying one of the probability analysis calculations that you should be making in your mind is inflation matters, prices matter. Okay, headline CPI and core CPI matter right now, even though the Fed might try and say core, but energy, you can't deny what's going on. And if we start seeing energy climb back up to $90 to $100, and you start seeing that being an impact on CPI, on a month-over-month, year-over-year basis, it's going to start mattering when we're supposed to see those numbers coming down. I'm sure the chairman may get some questions tomorrow about the price of energy. Gold catching a bid this morning, up by 1%. You put gold on the 15-minute. There's your acceleration from about 9 o'clock last night. 8 o'clock last night. Things looking a little dire, 1633. You're at 1657. We got to jump around to the currencies because you know that you're probably going to see a little bit of weakness on the dollar when you see that type of action on gold. And sure enough, the dollar index from yesterday, we're down 76 ticks, man. 110.76. We take a look at that on the daily. And what did we talk about yesterday? Potentially testing that channel line, man, and then trading lower. And that looks like what we've done, at least so far, on the dollar index as we're at 110.76. Before we jump to the other currencies, just want to jump to that 10-year. As we're getting higher price and lower yield today coming into that Fed, the 10-year, 3.94%, the yield on that 10-year. The 30-year down, up more than 2 full points at 122.23. And yeah, let's jump around to some of those other currencies. So we got some dollar weakness. What are you going to get? You're going to get some euro strength. Euro bouncing right near parity, 99.51. We jump over to the pound US dollar right now at about 115. Now the pound, a little bit different action versus the euro. and then you jump over to the lovely yen. And yeah, we got a little bit of a reversal on the yen today, but boy, you look at it, right? Pretty well-defined channel line to the upside, and we are basically right near the middle of that channel line at about 147.12 on the yen. You put it on a 15-minute, though, that's a pullback for you from last night at about pushing 149, and we're at about 147.13 in the yen. So gold catching a little bit of a reprieve. We have some dollar weakness. We have lower yields coming at you today. Lower yields on the 10-year coming at you today. Interesting in terms of the action we're getting ahead of the Federal Reserve tomorrow. And we have a market that is a legitimate. Let's do it. Let's do it right now, what we are. Let's pull up the calculator because I was doing it yesterday for my newsletter, and we were at about 11.4%, I think, and that was doing at about 3,900. We're now at 3,923. You are exactly... 420 almost for Mr. Elon Musk, 421.5. We'll call it 421 points above the lows of 3502. We're at 12%, folks, 12.02% lift off of those lows. Now, where do we go if the Fed gets a little dovish? Well, let's get some of the takes around Wall Street. And JP Morgan, they're saying that we could go 10% higher, man, if the Fed turns dovish. Analysis offers a wide range. As you should expect, outcomes are skewed to the upside, said teams led by some of their analysts. The S&P could surge at least 10% in one day. That's why I started the show off with it. I said, what? 10% doesn't seem outlandish. But in one day, if they raise interest rates by a slower than expected half a percentage point. Okay, now I don't think they're going to go half. All right. It's the least likely to materialize, yet the most bullish outcome for equity investors. Folks, even if they go at half, I don't see it going up 10% in a day. There are a lot of risks in this scenario. We get non-farm payrolls on Friday. We get CPI next month, 10% in a day. But it would signal a dramatic shift out there. So they lay out every possible scenario on Fed Day. A high-stakes task of predicting market moves in terms of what they could do. And below are some of the scenarios that they talk about, right? 50 basis point hike, I mean, get it out. Let's just get to the 75s, okay? Because that's what the scenario is likely. Anything could happen, folks, right? Anything is possible. But it would be a radical change of 50. And here's the kicker. At least when they went higher than they were going to, the chairman said that, listen, we got data during the quiet period that caused us to have to change what we were doing. And it was the quiet period. And he said, this is a very rare occurrence over my time. Now, we're in very rare times, so not exactly an excuse, okay? But from what they had forecast to the meeting, you had a quiet period that had data that was monumentally not where they thought it would be or expected, so they changed what they were doing. To get to 50 basis points right now on a hike, that would take some data from the last time they've construed what they were going to do. The last time the Fed was telling the market what they were going to do, there would have to be data to change that. That hasn't happened. So it's going to be 75. And they're looking for, okay, even with the 75 basis point hike and a dovish press conference, S&P maybe 2.5 to 3%. 75, and this is the most likely outcome, okay, with he emphasizes the current risk to inflation moving higher. It's the outcome most expected, folks, okay? But you could see the S&P down 1% to up 0.5%. A little bit skewed to the downside. We'll finish talking about this, but we're going to talk to our man Kevin Hincks when we come back, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you could trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps up by 40 points right now. That's just more than 1% the positive. NASDAQ 100, you're up 1.3%, 11,599. You got the Dow right now up about 0.2%, trading at 32,979. We were just off that 33,000 print. Let's jump over to our man Kevin Hincks, folks. Every trading day, 12 noon Eastern time. Fast Market from the TD Ameritrade Network right here on Tiger TV. Your host, Kevin Hincks, Tom White. They break down the day's market action, folks. They walk you through hypothetical trade setups. Usually they're doing three throughout the hour, all of them with defined risk in a market, man, where we got some volatility. And Kevin Hincks, we got positive equity prices. We got lower yields. We got a lower dollar this morning as we come into a Fed meeting. Good morning.
Good morning, Tommy O'Brien. Yeah, first day in November, strong markets to start the month after a strong month of November. October, Tommy, that's for sure. So, it's interesting. The markets are up today on remember, I'm going to say this, unconfirmed reports that China will be moving away from their zero COVID policy. Social media is reporting. That is fueling the markets. That's fueling the dollar lower. That's fueling rates or yields lower as well. First day of the Fed meeting, the narrative out is that the Fed will slow its tightening pace. So, Tommy, you're hearing a lot of unofficial things that are moving markets this morning. When I know for sure? When the Chinese government announces it and when Jerome Powell speaks on Wednesday, Tommy. But a lot of speculation fueling this market higher. Yields are lower, the dollar's lower, and that's got stocks up on the day, at least to start the day, Tommy.
There's a lot going on, obviously, this morning, Kevin. A great little analysis, and not even little. And in my head, I was talking about yesterday, Kevin, the stories out for Shanghai Disney, right? That they had locked down Shanghai Disney yet again after limiting it. You couldn't leave if you didn't have a negative test. But don't worry, man, because the rides are still going. And I said, thank goodness, folks. Could you imagine the riots, rightfully so, if that ever happened here in America, that they lock you in Disneyland? Said, don't worry, though. The rides are still going. Enjoy it while you're here. So you always stay in the short term is something you like to say. I like that attitude, man. Well, staying in the short term. They got 10 cases and they locked down Shanghai Disney. So I'll see that when I see it. But as you say, it's out there. The headlines, they were talking about it in the den earlier this morning with Chinese stocks erupting on zero COVID exit. Well, they're not exiting yet, man. Ask those people in Shanghai Disney what's going on this weekend and how their adventure was in China. With that in mind, though, Kevin, the markets, I mean, they're leaning towards right now. If you ask me, I'd say, geez, they must think that maybe there's going to be a little bit of a rhetoric tomorrow that we're going to see lower yields. We're going to see less interest in the dollar to chase those yields, and the equity markets might catch a little bit of a lift. Markets looking for 75, Kevin. Do you have any take on what the chairman may say in terms of where they go forward?
Well, the chairman has been extremely quiet going into this Fed meeting, and even though everyone believes that they'll raise 75 basis points, the speculation is what they're going to do in the next two, right? The general speculation is he'll go from 75 basis points to 50 to 25. A lot of rhetoric after the last CPI number was that those back numbers would start to rise up. Then the narrative started to change and soften, even though CPI was higher, even though the PCE was flat, but flat at higher levels. So, Tommy, I want to hear out of Jerome Powell. I don't put a lot of faith in pundits and other people because at the end of the day, this is Jerome Powell's Fed. It's not theirs, so they can say whatever they want. But one thing that you should watch for, Jerome Powell's going to map out the next 6 months. Where does he expect inflation to be in the next 6 months, Tommy? That could give the market some faith or comfort. But Tommy, if he comes out like he did in Jackson Hole and stay extremely hawkish, this is going to get interesting. Let's put it that way.
And in my head, I say that some of the most dovish things he could say, right, are that, okay, we're not on a path, and this is my opinion coming in here, that we're not on a path and we're going to let the data really depict it, and we don't have to maybe be as strict with the 75 basis point hikes coming down the line. But what do you think, Kevin, if that's a good dovish case, which it could be depending on the words he uses, obviously, and how that's phrased, but let's say he just points to the fact that, you know what, we're gonna really focus on this data coming down the line. Do you have any take on where we might see? Because we're going to get it so quick, man. We get the non-farm payrolls on Friday. Then we're going to get CPI later this month, of course, but for October. So do you have any take on if they say that the data has to line up eventually? Does it? Or is this something that they could really pause for 3 or 6 months if we really lag a bit here? What do you think on that? I'm asking you all the easy questions this morning, Kevin.
Listen, here's the one narrative I don't buy into. That there's going to be any decrease in interest rates anytime soon. That I don't see. They may, in a best-case scenario, if they see data start to slow the levels of increases, the basis points that they go up, I could see that happening because they admitted that they were front-loading some of it. But, Tommy, you've got to see it in the data. The last CPI number didn't do that. The PCE was flat, kind of unchanged month over month. That's not lower. That's not 2%. So, yeah, I think some of the real interesting discussion is the lag, right? The lag that the increases, how long does it take for those increases to get into the economy, and are we overdoing it? That's the real question that's out there right now. Jerome Powell's going to probably give us a lot of information coming up, but at least excuse me, Tommy, so far as the data, inflation is not coming down other than housing. And maybe that's just the start of the cascade of inflation coming down. But boy, Tommy, not showing up in CPI and with crude oil up $2.50 to start the day here, that's not great for inflation either, Tommy.
It's a great comment, man. I have a crude chart up as I'm talking to you, Kevin, and I was going to say, I said, and then you got crude, right? Just from where it was yesterday at almost 85, we're pushing almost 90 this morning. As you said, up $2.56, man, on that Thinkorswim platform. We have some companies already out this morning with their numbers, Kevin. Earnings, a big week this week. What are you guys talking about coming up on Fast Market today at 12?
3 good names to look at today, Tommy. First, AMD, the software company, semiconductors. We'll look at their earnings report, much anticipated coming out. Like Foley will do a presentation on Airbnb, and then we'll look at a healthcare company, CVS. You would think it's a pharmacy, but really they're starting to get into healthcare, Tommy. So we'll look at AMD, Airbnb, and CVS today. All earnings plays.
Three great stocks, man. It is pretty cool how many equities we got with earnings this week. Already this morning, you named three great ones, and we got a volatile market, man. And with that, we got a VIX right now sitting under 26, Kevin. I got, I think, 11 or 12 straight red bars on the VIX as we come into a Fed meeting where they're supposed to hike 75 basis points. I said yesterday, and you made the point, they're not going to go 75 forever, folks. You know, it seems normal when things happen over and over. Somehow 75 for 4 straight meetings is normal, but these are exceptional times, man. And like you said, we're going to find out some good information from the chairman, I imagine, tomorrow. Kevin, we appreciate it. We'll talk to you one more time tomorrow before we hear from the chairman tomorrow at 2 o'clock. Have a great one. We'll be watching at 12 today, man.
Thanks for having me on, Tommy.
Always a pleasure. Folks, tune in. You heard it. They're talking three great stocks. You got AMD out there, and you talk about a pullback, man, from 164 down to $60 for AMD, and that's in that channel, but you got a little bit of volatility on both sides. You jump over to the Analyze tab. You jump over to the earnings, folks, and you're looking at a $4 move priced in. Their numbers after the bell tonight. And if you want to take a look at the volatility for the week, that's a decent move, man. $5.20 for a $60 stock. Stay tuned, folks. We'll take one break, and we'll be right back for the open.
Now, with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now. You're looking at an S&P up by 39 points. And as I said, man, take a look at this area. If you're looking for a short, you can easily just put your stop somewhere on the other side. You make a run from here. Where are you stopping? You're at the 618. You're at about 3,900. You're above the lows that we were at from the lows of September. Now, I'm saying above. I'm saying if you decisively break above this area, you could go short, give yourself some area right above this. Maybe you give yourself 10, 20 points or something like that, because, this thing runs. Maybe you make a run to 4,200, man. It seems remarkable that we make it back up to September 13th. But as Kevin said, there is a lot of rhetoric out there about the potential path to easing, the rate hikes that are coming. And if you ever really get some type of massive announcement that zero COVID China is over, watch for a rally there, man, because that has been something that I don't know how the whole global economy moves forward if you have China doing that on a constant basis, because that is a never-ending battle. And you heard it. They locked down Shanghai Disney for like 10 cases over there in Shanghai. That's never going to end, folks. Imagine if they just kept locking it down. And then so eventually it will end, and maybe they've kind of reached that point. Yeah. Nonetheless, market gives it back a bit. We're at about 39.15 right now in the S&Ps. And jumping back to some of the articles I was talking about to kick off the program. So let's go with the scenarios they lay out of 75 basis points, folks, because I would say there's almost a 0% chance that they go above or below that, considering there has been no data in between the last time they forecast what they were going to do, even though the chairman's been a little quiet on his rhetoric, until they come out. So you go 75, right? Now look at the two scenarios that JP Morgan lays out here and look at the skew in terms of the risk for the upside to the downside, okay? Let's say, and this is the most likely outcome, okay, which is they hike by 75 and they have a pretty hawkish press conference that says, hey, guess what? The risk to inflation is moving higher. We have CPI, as Kevin said, the data is not lining up, et cetera. Let's say the chairman comes out hawkish, right? Even in that scenario, JP Morgan says it might be up 0.5%, but you might be down 1%. Well, I would push to the fact that, you know what, there is so much optimism out there right now that if he really says 75, and guess what, 75 is completely on the table, because why does everybody keep talking about a pivot when inflation is almost heating up still, right? You could go down more than 1% on that type of a conversation. But if you get 75 in a dovish conference, which press conference, yeah, I would say 2.5 to 3 is in the scenario. So those are the two scenarios. You see how JP Morgan's calling it. One of the other indicators out there that Bloomberg was talking about, you have the bonds rallying, right? We have the 10-year yield at 3.94%, I think. What do they have? Yeah, 3.94 they have in the article. It was at 4.34 last month, folks. That's 0.4%, right? That was the highest since 2007. Now, this comes, okay, as in what we're going to look at here is the difference between where the 3-month rates are now, okay, the 3-month T-bill. Let me even pull it up to give you that number in terms of where the T-bill is for the 3-month right now. The 3-month right now is 4.13%, the yield on the U.S. Treasury 3-year, okay? And what this is this is the difference between where 3-month rates are now versus where they're expected to be in 18 months' time. It's on the cusp of inverting, with the spread between the two tumbling to 0.2 percentage points. You can see the big difference here as it shot up originally. Now, it makes sense, right? If the Fed is on a hiking cycle in the future, then short-term rates in the future are going to be higher. If the Fed is about to begin a cutting cycle in the future, then you would have short-term rates in the future being lower where they are right now, right? So you actually have the point in time that this is a recessionary indicator, and it's one of the most watched indicators, okay, as that's the quote-unquote favored portion of the yield curve is as they put it. But, boy, it's a pretty decisive number when you look at it, man. Listen to that market, okay? Short-term Treasury bills, 3-month T-bills, okay? This is the difference between the implied yield on the 3-month T-bill in a year and a half versus what it's yielding right now. Policy rates are entering restrictive levels, where there have been some soft patches of economic data of late. At some point, the Fed needs to move to smaller rate hikes, and this may happen at the December FOMC meeting. We're going to find out tomorrow, man, and it will be an interesting one. All right, jumping around to some of the equities with numbers. How about Uber, man? Big numbers from Uber. Gross bookings increasing 26%, but ironically, not even living up to expectations. Third quarter sales jumped 72% to $8.34 billion. The market was only looking for 8.1, man, so that is a big number. Gross bookings, and that is everything. That's ride-hailing, food delivery, and freight, $29.1 billion, but slightly below. Adjusted earnings before EBITDA, okay, $516 million. Market was looking for $458. Now, they lost money, but that had to do with some of the investments like Diddy, et cetera, overseas. Uber's rideshare bookings are poised to surpass delivery as takeout demand moderates. All right, now look at how this changed for the pandemic. We go back to Q1 of 2020. Uber, mobility is in blue. That's driving. That's ride sharing, okay? They were doing, what is that, 10.5 billion maybe? Yeah, probably 10.5 billion in terms of that number. Drops to 30% of that number. Delivery bookings takes over in terms of food in a big way, but guess what? They're back, folks. They're over food. And I tell you, man, food, it is going to become a super luxury. So, yes, it's good that they're in that business, Uber Eats, but that one is going to be a tough one, man, because that is a luxury for a lot of people, folks, okay? A lot of people can make the time to pick up that food if they need to, right? A lot of people. Not all people. Some people, it's well worth it. They can't make up that time. Time is valuable. You only have a certain amount of it. Maybe you just can't make up that time, and it's worth it for you to spend that extra money. But I'm telling you, man, I think I talked about it on the show a couple months ago. I ordered 2 or 3 burritos from Uber Eats through Chipotle. And man, it was like $70. It was something bananas. I'll see if I can find it in my phone during the break. But it's become a level that's tougher and tougher to rationalize for those prices. So they may be in trouble in that sector. But guess what, man? Ride sharing, that's not changing, because most of the times that is not a luxury, folks. If you're taking an Uber, most of the time, it's out of necessity, whether you're taking one for vacation, whether you're taking one because you don't have a vehicle, whether you're taking one because you're going out and you're drinking at night and you don't want to have to worry about having to drive even after 2-3 drinks. Go take an Uber, man. Why not? Even if you're having a few drinks, folks, take an Uber. It's an easy, relaxing experience. You don't even have to worry about it when you have 2 or 3 cocktails if you want to about getting home. So anyway, the ride sharing, it makes sense, man. And we'll see how delivery goes forward, but they're trading higher by 10-11% today. Food delivery arm Uber Eats, 13.7 in gross bookings in the quarter, a decline from the previous period, and missing the $13.9 billion number. Yeah, they're in trouble, man. You know, Instacart, I think they're still a private business, but they're in trouble. I used to use them all the time. These businesses that are relying on those fees, that it's a luxury, the gig luxury economy, they are in trouble, man. But Uber, not in trouble, up 15%, catching a bid this morning. We'll talk about some of the other equities moving as well this morning. You got Pfizer up by 3%. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the markets holding up pretty well right now. You got the S&P up by 35 points. You got the NASDAQ 100 up by 1.1%. Let's jump around to some of the FANG stocks real quick. Started off with the biggest of them all, Apple, up 0.8% following their bang-out numbers on Friday. You accelerate to 157. We're trading at 154.50 right now. We jump over to Amazon that disappointed pretty greatly last week. You give back, well, kind of those overnight gains. Amazon barely positive today as it was almost just at 105. Almost at 105, folks. And you talk about some numbers on the Fed. I wonder what they thought of Amazon's revenue miss that they'll be talking about in the whole holiday quarter, folks. What they missed by $8 billion projected in terms of the revenue that they potentially may take in for their holiday quarter. It might even be more than that in terms of the range that they're putting out there in terms of what they expected. Excuse me. Back to some of the conversation of the rates. My dad was texting me during the break talking about one of the other yield curves to mention, okay? The gap between, so this article we were talking about here, there's action everywhere, folks. Pay attention because we might be nearing the end of this, man. There's indicators everywhere. We might be nearing the end of the hiking cycle. We might be come into a recession, okay? So be aware of all of that as you get some market optimism as you come into potentially a recession because of what the Fed has just done. You're going to see the fears dramatically change if this is what's happening from the Fed and their hiking restrictive policy to the actual underlying economy and the problems as we shrink potentially for multiple quarters for a recession. Now, the one we were just talking about here was the difference between the 3-month bill now versus where it's going to be in 18 months. And that one is very close to inverting. Now, with this article also referenced at the end here, okay, another widely followed yield curve, the gap between the 3-month and the 10-year, inverted last week for the first time since March of 2020. Now, you take a look at this article. Okay, this article is when that yield curve inverted. Okay, we're talking about just last week, October 26th. The 10-year Treasuries notes yield lower than the 3-month bills. And let's take a look at the chart. They have it. There it is. You see the inversion. Now, they go over here that the last times that this is happening, okay, let me get it down. Inversions of the 3-month to the 10-year curve. Yes, let me start. Inversions of the 3-month to the 10-year yield curve have heralded past recessions. The curve inverted as much as 0.28 percentage points in March of 2020 and became deeply negative in 2019, 2007, and 2000, all at the end of Fed tightening cycles. Now, it became deeply negative, okay? It was at 0.28 percentage points back in March of 2020. You take a look at the chart, we are just coming into that negative area, right? There is your 0.28 in March of 2020. There is your deeply negative in 2019. So what did we get to? Basically almost half a percentage point, maybe 60 basis points to the downside negative. You look back on 2007, probably in a similar area, 50 to 60 on the negative side. But what is that saying, folks? Okay. Now, what's interesting in here as well, and I think this is where it was, because when the 2-year and the 10-year originally inverted, is this where it says? Come on. You had the chairman saying that that was not as big of a deal. I'm going to find that quote, even if I have to find it after the next break, though, folks, because this one is a bigger deal in terms of the 3-month and the 10-year. So take it for what it's worth, but there are indicators lining up, man. We are in a restrictive policy. The chairman is aware that there will potentially be tightening, and I think the market, though, has priced that in to a certain degree. That's what you also have to consider, folks. Okay, you also have to consider that we are now 12% off of the lows. That's a pretty decisive break, sitting at 3,900. We're back at prices that we last saw in May. And I would argue that in November, things have not played out over the 6 months since May, as the chairman had probably wanted. But guess what? We're coming into another 75 basis point hike. And we get to wait for what the chairman shows and talks about in the press conference to follow. Pretty interesting that you got a VIX that is just completely trailing off into this meeting. So there is a lot of optimism, folks, but I would say that there is a lot of optimism for the Fed to go 75 and be dovish. And if you don't see that happen, you could see a real recoil in this market right now, with the VIX pulling to 25.85 and the S&P sitting above 3,900 after a pretty dismal season of FANG earnings, at least, that are so important, except for Apple, of course. But look at even Apple. Apple, okay, is actually above where you were chopping around the lows in May at 153.79, whereas the market is sitting right at that price point. Let's check out some of the currencies and see how they're moving on the open. Dollar index, yeah, just chopping around, basically at 111. We jump over to the yen, sitting at 147.36, bouncing off that 147 price point. We take a look at the gold contract, sitting up about $15 right now at 16.55. You could see some huge action in the dollar and the gold contract. You get some action tomorrow. That's where you could for sure. And yeah, how about crude? Keep your eye on crude, man, because this market starts driving higher to $95 or $100. That is not what the chairman wants to see, man. They're going to have some tough times ahead when we are seeing higher prices, when energy is soaring across the board. That's not going to help anything in terms of what they're trying to do. Okay, let's see what else we had pulled up here in terms of what we're doing. We talked about Uber earnings, some big numbers. Pfizer beats the third quarter expectations. They now expect 640 to 650. Profits is what the market loves right now. Up from 630 to 645. They beat earnings and revenue for the current quarter. And they raised the full-year sales guidance for the COVID vaccine to $34 billion this year, up $2 billion from the company's previous expectations. And yeah, they're making money, man. Adjusted, $1.78 versus $1.39, and revenues, $1.6 billion beat, man. 22.6 versus $21 billion. They sold $4.4 billion of the COVID vaccine worldwide in the quarter. That is a decrease of 66% as they were rocking things out in the third quarter of 2021. Yeah, nonetheless, Pfizer trading higher. We jump over to them. It's been quite a pullback, man, from 41 up to 47. But even on this run here, let's take a look at where we just traded to, man, on Pfizer. Yeah, right at about the 50% of this recent pullback from 53 down to 41. We're up to 47, but Pfizer and this market right now giving up. I mean, the S&P just gave up about half of the gains that we had. There's Pfizer. We were at 48.50. You're at 47.50. Let's see how Uber's trading on the open. Holds on to those gains pretty well, up about 15%. You got Lyft earnings next week. They're catching a lift today, pun intended, up 10% on some big numbers. Why are they up on big numbers, man? Because they don't even have food business. So Uber missed on the food business. They beat on ride sharing, and Lyft is basically a domestic ride sharing company. That's what they do, man. And, you know, recently, I've begun to think that might be the play, man, Lyft versus Uber. Because Uber's going to struggle in those other businesses, man. This gig economy, all right, it's been supported by venture capital for some time, allowing those companies to exist at losses as they bring us all on board to this new society that we have for gig economies. Well, guess what? That ride's over. They're now public companies. They're now accountable to shareholders that want to make money and not just support losses for some long-term goal. And guess what? Prices have gone up for everything. Prices have gone up for those companies. They want to make money, and Uber now is profitable, and they will be in the future at least. And yeah, that means that, man, those costs are just very hard to rationalize many times for some of those services. We got Lyft up 10%, S&P's up by 19. One more segment, folks. Stay tuned. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps now up just 16 points. So much for 3,900, man. 38.99. Quick little sell-off in those markets right there. You get the NASDAQ 100 up by 61, trading at 11,510. And take a look at the S&Ps, man. You put this thing back. That's a 5-minute. Throw it on the daily. I was talking about it. Be careful, folks, because, man, you're just bouncing around at that 618 of that entire move lower you had from September 13th down to 3502. You're sitting about 11.5%. Off of the lows, folks. That is a lot of optimism going into a pretty dismal number from the CPI print when we got it for September and October. And we'll see what the chairman says, as I've been saying all program. Let's jump around to some of those FANG stocks as we got Apple slipping into the negative, actually. So much for gains, man. Apple down 0.1%. We got Amazon down 0.5% right now. Microsoft shares down 0.5% right now. Google shares down 0.4% right now. What is going on, right? We got some big stocks with negative action, man. Meta, boy, be careful of that one, man. up 0.8% today, but boy, you're just pushing all-time lows recently for Meta, 92.60. All-time lows recently, not really probably the proper way to surmise things, but boy, you got to go back, folks, all the way to when? We're at 92 now. 92. Where's 92 on this chart? July of 2015? Yeah, July of 2015. So 7.5 years. Remarkable, man. Is that as far back as it goes? Yeah, it is. That's as far back as it goes. You're almost going to go back to IPO prices. And boy, remember the cash cow he turned this company into, folks. Is that as far back as it goes? I think it is. Yeah, it is. That's as far back as it goes. 2012. I can't believe that's when they went public. I guess so. 10 years ago. Whew. All right, folks, thanks so much for tuning in. Let's check in on the VIX one final time because we got lower volatility, but guess what? There's a pop. We going to get a green bar, man? We got a green bar. Watch out, folks. We got a green bar on the VIX. What is that? The first time? 3, 6, 9. Yeah, that would be the first time in 12 days, potentially, a green bar on the VIX. Thanks for starting your trading day, folks. Stay tuned. Basil Chapman coming up next. Then we got our man Steve Rhodes live at 11 o'clock. Fast Market at 12. You heard them. They're talking about, what are they talking? AMD. They're talking Airbnb. We got our man Larry Pesavento at 1. Dave White at 2. Tom O'Brien wraps it up 3 to 4. Have a great Tuesday, everybody.